Good morning, it's Wednesday and I'm Tom Elliott. Here's my market report. Now, the first half of September has seen the stock market in extraordinarily good form. And I say extraordinary because September and of course October are historically weak months for the market. Now, in the US, people are getting guardedly optimistic. They feel that there is light at the end of the tunnel, that maybe a recession will be avoided, or at least a second recession, and who knows, maybe the government's stimulus measures might actually finally start to work. So as a result, we have seen equity prices lifting. But I would just say that typically the second half of September to early October, people start worrying about the anniversaries of the great market crashes, of course, of 87 and 29, both of which occurred in October. It's only superstition, but you know, superstition does have a big role even in modern markets. Now, in financial services, the ACCC has again knocked back NAB's bid for AXA, and NAB has decided to accept the ruling this time and walk away. Understandably, NAB shares have gone up because people were concerned that it was overpaying. AXA shares have, of course, gone down, and the big issue now is, will AMP, to whom the ACCC has given its blessing, come back with a revised bid? The problem that AMP has is that since it made its first bid a year ago, its share price has fallen. As a result, it probably can't bid the value, which is around $6.40 a share, that the AXA board say that they would like. Also, just to look out for what AXA SA, that's the French parent, might do. There's a chance, I think, that given it already owns 53% of the Australian business, it might just bid for the whole thing and then at a later date sell the Australian business, possibly to AMP. So see what happens there. We're having fantastic rainfall in the eastern states of Australia, not so good in the western states, but as a result they're forecasting a bumper wheat crop. And this is especially good because other parts of the world, like Russia and to a lesser extent Canada, haven't had such a good wheat crop. So Australian growers who themselves are producing good crops will get good prices at the same time. Now this means that the share prices of various agricultural stocks like GrainCorp, Incitec Pivot, and even New Farm, which has had 5 or 6 profit downgrades this year, have been very, very strong in the past couple of weeks. And you know, if the harvest is good, they will probably go higher. Also, of course, AWB is currently the subject of a takeover bid by a Canadian company called Agrium. The bid's $1.50 a share. The stock is trading a few cents below that. But I wouldn't be surprised to see someone else maybe having a go at AWB, given the strength of the Australian wheat harvest. We've seen the Gillard government has formed its first cabinet. Obviously, Dad and I will talk about that. They are, of course, going to push ahead with the National Broadband Network, and this has put Telstra in something of a bind. Its shares are sitting at record lows. Malcolm Turnbull's been appointed the Shadow Telecommunications Minister, which I think is a good move. But what it means for Telstra is just very, very murky, and that's the reason the share price is staying low. If you're buying it because it pays a good dividend, I'd be careful. Telstra's current rate of earnings will not sustain that dividend for more than maybe 6 months to 12 months. So you have to look at Telstra's fundamentals, as you should with any company, and the increased government involvement in the telecommunications sector does make life difficult for what is and should be a private company. And finally, the very strong AUD dollar. Now it's at 94 cents US today. Again, that reflects strength of commodity prices and, of course, the perception that Australia is primarily a commodity producer, which it is. That's very good for retailers. So we're seeing the share price of Harvey Norman, JB Hi-Fi, Myer and David Jones, because they're all going up because, of course, they import goods. And when the exchange rate goes up, their purchases are cheaper, but they don't necessarily pass on the cutting prices you see the customers, so their margins go up. Of course, it can be bad for resource stocks. So, you know, BHP, Rio, Fortescue all price what they produce, which is, of course, iron ore, coal and other metals in US dollars. And the strong Australian dollar could just put a brake on their profits. We'll see.